It's about that time of day again. My name is Joseph. Monday evening, December 4th. Welcome back to your nightly newsletter. We're covering crude oil, S&P, Nasdaq, gold, and euro this evening. Crude oil is bearish with a big old spike in channel pattern, telling me to look for selling opportunities up above the channel highs in the battle zone tomorrow morning. The S&P is also bearish with a parabolic move to finish today's session, and a channel overshoot tells me to look for selling opportunities back at the opposite side of the channel tomorrow morning. The Nasdaq is also bearish and trying to finish a major channel rotation tomorrow, but recent price action tells me the sellers are growing weary of selling so low, so my plan is to wait for selling opportunities up with a two-legged pullback tomorrow morning. Speaking of two-legged pullback, gold is bearish with a big flag pattern tonight, telling me to look for selling opportunities up above the high of that channel, hopefully right around Friday's closing price. And speaking of the closing price on Friday, euro is bearish with a big spike in channel. My plan is for tomorrow to look for selling opportunities up around that gap fill from Friday, up around the high, right, of the base of that spike in channel. Boy, great to be back here. I apologize for not being with you guys last week. Hope you had a great weekend. Another great newsletter, another big week of trading opportunities ahead of us. Before we jump into our charts and put the plan together here for this first full week of December, I want to remind you guys to make sure you subscribe to this YouTube channel and make sure you get notified every time I post a new video. If you really want to stay in tune with what's going on here at School of Trade, head over to schooloftrade.com or jump over to sidewaysmarkets.com and make sure you join the mailing list. And I'll send you an email every evening when our nightly newsletter is live. If you're on YouTube right now, not to worry, I'll put a link in that video description, right, to send you over here to the blog at sidewaysmarkets.com so you can join our newsletter mailing list. While you're here, don't forget, join me on social media, Stock Twitch, Twitter, Facebook, LinkedIn. I'm always posting important charts, links, and updates throughout the week. Speaking of charts, how easy is that? All the charts from tonight's video, you can have them on your computer for tomorrow, right below the video tonight on the blog. Again, there'll be a link in the description of that YouTube video. Follow that link over here to Sideways Markets and grab those charts for tomorrow. In the upper right-hand corner, make sure you grab your free pass. If you're not a member here at School of Trade, what are you waiting for? Grab that free pass. Come out and join me as a guest in the trade room this week. You're going to learn more with me on that free pass than you will anywhere else on the interwebs. I can pretty much guarantee you that. And if you got any questions, I'm always here to standing by to help you guys out 24/7. We have live support on the right-hand side of our website at School of Trade and also on our blog here at Sideways Markets. Don't be bashful. Type those questions right in, and I'll be here to answer them. Boy, hope you guys, again, had a great weekend out there. We're back in the action here this week. Jumping into our calendar here for tomorrow. Tomorrow's Tuesday, December the 5th. Of course, coming out of that end of the month. We've got a clear month right ahead of us here. Tomorrow morning, Tuesday the 5th. What do we have here on the schedule for tomorrow? Well, first of all, got a little bit of news coming out here overnight. We got retail sales. We got PMI from China. We got the RBA announcement, 7:30, 8:45, and 10:30. If you trade in the overnight Asian session, keep an eye on the time for those big news events. Biggest one, of course, being from China at 8:45 p.m. Eastern time. And then, of course, tomorrow morning, got a bit of a peppering tomorrow morning, too. We're going to hear from France, Germany, right, the EU, Great Britain, kind of 3:50, 3:55, 4 o'clock, 4:30. Plenty of news to keep us busy tomorrow in the overnight London session. And of course, don't forget, I'm going to be with my students, with our clients in the trade room tomorrow morning. We open up every morning at 8 o'clock Eastern time. And of course, we have that retail sales number from the EU, international trade and merchandise trade tomorrow morning at 8:30 a.m. Eastern time. That's about it as far as major news goes for tomorrow. So definitely watch the news overnight. Watch the news tomorrow, right, coming out of London. And again, we got that 8:30 international trade / merchandise trade at 8:30 a.m. Eastern time tomorrow morning. Everything else is pretty much mild tomorrow other than those big Red Star news events. Don't forget, this is the first full week of the month of December, so we'll be talking more about this as we get closer to Friday's session. But Friday morning is the employment number. That means as this week gets going here, we'll start seeing more people shift their focus to that employment number. First things first, though, tomorrow's Tuesday. Make sure you're aware of that calendar for tomorrow. And again, don't forget, as we go through our strategy here for tonight, I look forward to seeing you guys tomorrow morning in our trade room. We open up at 8 o'clock Eastern time. Let's jump right in. Starting off with crude oil. We'll go crude, S&P, Nasdaq, gold, and we'll wrap up tonight on the mighty euro. Crude is bearish with two channels to work with tomorrow. The first channel started on Friday afternoon with the most recent pullback being up around that 57 81, 57.81 right there, which will make for an excellent location to look for traps tomorrow. The second channel is considered a spike-in channel, right? Spike down, channel out. This spike-in channel tells me, right, to be focused on selling up above prior swings, with really the main focus at the base of that channel. We've talked about spike-in channels on this newsletter many times before. So really, when it comes down to it, this creates my battle zone. I think the most important clue right now, other than the fact that it's bearish, we're obviously bearish right now, is again, we got that strong bear channel starting off late in the day on Friday. And look closely at this channel. Where was the last time we kind of broke free of that channel? It was right here at 57.81. You'll notice it didn't break, though. This is really important. It didn't get above any other prior swing. What does that tell me? It tells me a lot of sellers are probably still waiting for this market to really jump up so they can sell it back down. In fact, I call this specifically, I call this a grind break. If you're a client of mine, log into your advanced classes here at School of Trade, and we talk about grind break, excuse me, if I can spell here tonight. Like I said, I was out of the office a little bit last week. I'm trying to get back into the rhythm of things here this week. Called grind break, right? In other words, when it corrected, it didn't correct very far. And what's happening right now is it's kind of grinding its way down the top of this channel, right? That's the term grind break comes from. So with that grind break, and again, it's a pullback or retracement that doesn't break above any other prior swings. And what that tells us is that sellers are probably still waiting up here to get that move higher so they can sell back down. So looking for this now as a grind break, trap high and back down from there. That will be definitely one of my go-to opportunities tomorrow if we can get, right, a nice big pullback off this low. Then, of course, with the spike-in channel, right? Strong spike down to start the overnight session from Sunday into Monday. And, of course, we have now that spike-in channel, right? There's your spike-in channel. That spike-in channel, anytime we see a spike-in channel, we always know to look left, find those prior swings, look for traps above those prior swings. But most importantly, we know that the area between the base of that channel and the first pullback, that's the sweet spot right there. So you can tell from here, right, my battle zone starts as low as 81 and really as high as, right, that 11. So my plan is pretty simple. I'd like to get up in that battle zone and sell it back down below. If we keep going lower, not much changes. I'm still waiting to get up so I can sell it back down again. So really there are kind of three different scenarios you want to be ready for tomorrow. Up, down, and sideways. If we go up, I want to see buyer failure. Price goes up, moving average comes over, buyers try to buy, and they fail, right? Buyer failure. Maybe it looks something like this. Maybe it's a two-legged pullback instead. And we see a relatively sharp move higher, right? We can see that little two-legged pullback. You know, what was support acts as resistance for that drop back down. It might be as easy as simply a trap high, right? Trap high into failure, right, into strength going back down to that low. Bottom line is I'm looking to be a seller as that price rises higher with, of course, the appropriate entry trigger. Second scenario you want to be aware of is we had a big strong move down here. We haven't seen much of a pullback lately, and so that may end up in the price going sideways. Bear bias into a trading range. So if we come out tomorrow morning, 8 o'clock, 8:30 Eastern time, we see the market not making new lower lows, not making new higher highs, moving average kind of flattens out here. We know the story, right? We know the market's still bearish, but for some reason they're not looking to sell high. What's my plan? Or sell low. What's my plan then? My plan will be to use the 2-try rule. 1 try, 2 try, looking for those buyers to try and fail up above the top of that range for a sell back down again. Pretty simple. Now, third scenario. What if we keep rolling lower, right? What if we keep rolling lower? I mean, you have to assume that after that big collapse off Friday's run higher, we have to assume we got some easy targets down here around that 57 even level, right? Some of those major swing lows that we've seen in the past few days. So as price goes lower, not a huge surprise. It's very bearish right now. There's not a huge surprise there. The problem is I really don't want to sell down near the low of this channel. So as the price keeps rolling lower, your job now is to look left, find those prior swings, and just like I talked about how sellers were waiting to sell above prior swings earlier on in this lesson, I'm looking for the same thing tomorrow. Get it up so I can sell it back down again. So no matter what happens, I'm looking to sell at resistance, right? I'm looking to sell high. If price keeps going lower, I don't want to just throw away my plan here and just chase the market lower. I'm looking for opportunities, right, to sell high, sell up above resistance. So whether price goes up, whether it goes down, or whether it goes sideways, the bears have control. I'm looking to sell above prior swings, above the moving average, really get it nice and high so I can sell it back down. One last thing. How do we turn bullish? Is it possible? Of course it's possible. Anything's possible for tomorrow, right? How do we turn bullish? We need three things to reverse a trend. Strong move against the trend, pull back to the moving average, and then a strong move continuing. These are the three things that we need to reverse a trend. This is not just crude oil. It's not just a bullish reversal. It's any reversal. Strong move higher. That strong move higher will give the buyers confidence to buy the pullback. They pull back to the moving average. Buyers have confidence to get in. We're not done yet, though, because remember, if they fail, this will go right back down to those lows, and guys like me are going to be waiting for that failure to happen. What I'm looking for now is I want to see those buyers hold the pullback and really explode higher, right? If they explode higher, that's going to be the key, because it will tell me that sellers aren't selling. They're actually becoming buyers now, most likely taking profit on any positions they have left open. So we can definitely turn bullish tomorrow, right? It's not likely the way it looks right now, but it's certainly possible, right? Maybe not probable, but certainly possible. So keep an eye out for that possible bullish reversal, strength, pullback, strength. Anything else, and we're looking to sell back down. Again, long-term targets going to be down around that 50, we'll say 56.93, right, that 75 range that we have. Again, coming out of last week's lows that were in that 75. So bears trying to get back down to that 75, 56.75. Bulls would desperately like to take control of this market. And if they do, we'll find a new bull channel. We'll find a new series of measured moves, and the buyers will be trying to go back up and retest Friday's high, right? But they've got to take control first, because right now going back to retest that high is looking like a pipe dream. Boy, speaking of pipe dream, how about that S&P today? Wow, S&P is bearish with an overshoot of the channel low after a parabolic move lower to finish today's session. Now, the S&P has the potential to keep going lower tomorrow, back down to Friday's low. But I don't want to chase this price any lower than it is. So my plan is to wait for a pullback to the high of that channel, get back above that moving average, right? And then look for, a move back down. Now, pretty strong way to finish off the session. We got a lot more room to go here. So if we don't get that pullback, look out for this to turn into its own kind of spike in channel here. Right? So like I said on crude oil, there are pretty much three scenarios we have to be prepared for. We know we're bearish. It's not a bull market, that's for sure, right? It's bearish. It's almost too bearish, right? Look at how long it's been since we tested that moving average, right? It's been quite a few hours here, 5-6 hours since we've tested that moving average. You can see how strong that move, was after it failed to go back into that range to start today's session. Now, I did my best to draw what I think is the best fit for that channel. You'll notice it's got some bounces here, bounces there, bounces here, bounces there. That looks like that's the best fit for that channel. It's always a bit of a guessing game when the market just falls apart like that, right? There clearly wasn't much rhyme or reason to it on the way lower. Just get me out, right? That was the sentiment this afternoon. That overshoot, though, the amount of the overshoot from this channel gives me a good idea where the overshoot will be on the opposite side. The amount of the over rotation outside of that channel, usually these markets will kind of slingshot back up in the opposite direction, right? Kind of slingshot back in the opposite direction. Now, it's a pretty strong move down. So, no matter how strong it moves higher here, that slingshot going higher, you still want to be careful before you try being a buyer on this. So, up, down, sideways, up, down, sideways. Well, the easy one is going higher. The last real swing low we had was at 45, and we got that naked reversal line here at 50 3/4. So this is the sweet spot for me tomorrow. At the same time, we have that overshoot into overshoot, so you can kind of see how that's all lining up there pretty nicely at this point. So how do we get it done? Well, it could be as simple as a trap high above that 41 1/4, right? I mean, that could be as aggressive as a trap high into a buyer failure, back down in, right? So trap high, moving average, buyers try to buy the pullback to the moving average. And like I said, if it jumps up here, buyers could buy the pullback. If they fail, we then look for that failure back down to retest that low. Pretty simple there, right? Pretty simple there. That would be the most aggressive sell. Trap high above that 41 1/4, buyer failure, right? And of course, back down to retest that low. Ideally, I'd like to see us go a little bit higher than that tomorrow. Hopefully we can. Think of a possible two-legged pullback, right? You get your rising support trend line. That rising support trend line turns into overhead resistance. Or, you know what, maybe we get a little more stronger, right? Maybe it goes up, really strong jump up, moving average comes over, something like this, right? Failure into strength, strength into pullback, pullback back down, right? Failure, pullback pattern, easy, easy, easy. Again, got to get up off that low and bringing it back down again. What if we go sideways here, right? Hey, what if the sellers in the market don't take profit? But nobody keeps selling though, right? So there's no new sellers, but the bears who are already in, they don't take their profit. What will happen? Yeah, we'll go sideways. Moving average comes down, flattens out. We start going sideways here. We dealt with that early part of today's session as well. So what happens if it goes sideways? Well, if it goes sideways, double tops, double bottoms, or a triangle pattern, right? Whatever variation of a trading range you want to look for tomorrow, we then know we want to sell high. Very similar to what we said on crude oil, right? Sell high, get up above that high, one try, two try, right? And then back down in from there. Anytime I have a trading range, my plan is pretty simple. Get above the high of that range because it's a bear bias, right? It's bearish going lower here. And because of that bear bias going lower, I want to sell above that high. The key is focus on failures using the two-try rule up above that trading range. And if you're brand new to my nightly newsletter, not to worry, there's a wealth of information on my YouTube channel and on my blog at Sideways Markets about how to use the two-try rule, right, and how to use those failure patterns as well. And of course, we teach all this stuff in our beginner, intermediate, and advanced classes here at School of Trade. So with that said, that's if price goes sideways. Now, what if price goes lower? What if it goes lower? Well, very, very strong move down here today. We could be seeing just kind of a mass exodus of these bulls right now, and we could find ourselves back down around. That's Friday's. Remember Friday's roller coaster? Yeah, Friday's roller coaster session. We could easily find ourselves back down to Friday's low. Maybe not tomorrow, right? But maybe towards the middle to the end of the week. Who knows? We saw a pretty good move today. We might see a follow-up move there tomorrow. Remember what I said on crude oil, right? If it keeps going lower, we still have all these sellers waiting to sell up here, right? All they're going to do is they're just going to bring their orders lower and start to stack them a little bit lower. So even if we do go lower here, I'm still waiting for that opportunity here to sell up at a level of resistance, right? Sell at resistance, don't sell at support. So if price goes lower, sometimes we see these big, strong moves. They turn into almost like a spike in channel of their own, right? So kind of watch for a possible spike in channel there. And as I mentioned earlier, anytime we have a spike in channel, find the base of that channel and the first pullback, and that becomes your battle zone for tomorrow. So maybe we get a spike in channel out of it, or maybe it just kind of grinds lower down here. Again, if that's the case, wait for it to pop up, right, and sell that sucker right back down. Just don't chase after it going lower. Pretty easy there on the S&P. Nasdaq is somewhat similar. The big difference is that you'll notice on the S&P, On the S&P, we get a pretty well-behaved channel here, and we're overshooting that channel. On the Nasdaq's a little bit different. You'll notice we're definitely bearish, but this time we're trying to finish that move back down to the low of this wide channel, right? A little bit more structure on this chart for traders to work with. There's also a measured move down around that 62.12 half area as well, right? So a lot more structure on this chart to work with. But looking closely though, right, we know these bears would love to return back down to those lows of the channel, but look close at the candlesticks in these charts, and you can see it's been a long time since we pulled back to the moving average. But if you look closely, you can see, though, there's a lot of big wicks down here, right, at the end of today's session. So with this information, we're definitely bearish. My goal is to look for a pullback, hopefully back above the moving average, where I can use the top of this channel as major resistance for selling opportunities down to the measured move target tomorrow morning. So again, I got the top of this channel. Now, at the very least, this is falling resistance, right? At the very least, that's falling resistance, and I can definitely count on that, right, as falling resistance overhead. At the same time, right, I get that potential for a larger channel here as it rotates from the high down to the low, low to the high, and then high back down to the low. You'll also notice that measured move down there as well. So that's where the sellers are undoubtedly targeting. You'll also notice that the Nasdaq doesn't have as far to go as the S&P does to get back to its Friday low. Okay, so that's a big difference. You know, the S&P has a large amount of open space to go back to Friday's low. The Nasdaq is pretty much there right now, right? It's pretty much there right now. So we definitely got to be careful as the market moves lower. I also want to remind you here, as we go later into this week, we do have rollover. Just remember that. We do have rollover here this week on the E-minis, right? I believe that's on the 7th, I believe it is. 7th, between the 7th and the 9th this week, you know, the first Friday of the month. So we'll see when that rollover happens. It may be earlier rather than later. Just keep an eye on the volume. This is the 1217 contract right now. We're rolling over to the 318 contract later on this week. So keep an eye on rollover. I'll come back and we'll talk more about that later on this week once it gets a little bit closer. But kind of think of that, keep that in the back of your mind here this week as well. With that said, beautiful example of a bear channel, right? And that bear channel, two-legged pullback, right, for a sell back down to that low. Most important thing is you can clearly see those bears had no problem selling down below that low, right? If they would have had a problem selling that low, this would have bounced, then this would have been your trading range right there, and we'd be looking to sell up around the high of that trading range. But since we got that push through, that gives us a little bit more feedback from the market that these bears are a little bit more, right, a little more in control than they probably need to be right now, right? So selling through that low. So what's my plan here for tomorrow? Well, really at this point, everything really above that prior low can be used as resistance. In all reality, this whole area up here could really be our battle zone. I don't like to use that wide of a battle zone for you guys, right? I want to keep it as specific as possible for this newsletter. But as you can see, though, I mean, it really could be this entire area right here, up and then back down we go. Up, down, and sideways, right? Let's plan for it. What if price goes higher? Well, I'd like to incorporate this falling resistance trend line, right? So maybe a trap high above that 91.25, trap into buyer failure, right? Into strength, into pullback, going lower, right? So again, trap high, right? Trap high, failure, into pullback. Just get it up around levels of resistance. You know, that's always the key to success, isn't it? In a bearish trending market, sell at resistance. Don't sell at support. That's more than half the battle, right? Just don't sell into support. That's if price goes higher. Now you'll notice maybe we get a little wick to wick action here. Maybe the market goes sideways here tomorrow, right? Strong bear move down. Hey, maybe we don't see more sellers enter the market, but maybe nobody's taking profit either, and price just kind of cruises sideways. If that's the case, this becomes a trading range. We're looking for that 2-try rule, right? 1 try, 2 try, and then back down from there as well. What if price keeps going lower here tomorrow? What if price keeps going lower? You know, what if this thing just kind of traps and then dumps back down, right? What if we find ourselves tomorrow morning right? Trading all the way down back at these lows. This is one of those really wide channels. And remember, when it comes to a wide channel, real quick here, if it's a narrow channel, right? If it's a narrow channel, I'm going to focus on selling the top of that channel, right? If it's a narrow channel, I'll focus on selling the top of that channel. But I'll tell you, sometimes we get these really wide channels, right? Really wide channels. And what happens is, by the time we get down to the low of that channel, we have so much momentum, right? In other words, the move's so large, there's so much momentum going lower that it's just a little bit unrealistic to expect the market to go, okay, back to the top of the channel and then back down again. Most of the time when you have these really wide channels, first of all, add that midline in there, and then look left. Find those prior swings, and you can usually get a nice bounce and then back down for one more shot from there, right? So we kind of have that wide channel right now on the Nasdaq. So if price keeps going lower here, I'm going to push this thing forward here a little bit. If we keep going lower, right, tomorrow morning we find ourselves kind of hanging out down here right after the overnight session. Look left, right? Find those prior swings. Grab that midline right in the middle. You know, and now you've got a pretty good idea of where you want to be looking, right, for that sell back down again, right? It's a wide channel. We just may not see enough sellers take their profit to get all the way back up to the high of that channel, right? Really wide channel like that. So again, up and back down, sideways, right? Sideways range, trap, 2-try rule, and back down. If we keep rolling lower, look left, up and back down from there. You can probably see a pattern developing here, right? In a bear market, sell at resistance. If it keeps going lower, that doesn't mean sell low. That means stay patient and keep selling at resistance, because that will typically be where you're going to find all the big lot traders, right? They're going to be hanging out overhead there as well tomorrow. How do we turn bullish? 3 things, right? First things first, strength. Second thing is what? Pull back to the moving average. Third thing is, you got it, strength, right? Show me, buyers. I don't care what direction I trade in. Show me that you mean it. Show me you can give a nice strong move higher, and then show me specifically that this isn't going to fail and go right back down to that low again, because that's what bears are waiting for. They're waiting for scenarios like this, where it gets back above the moving average. Buyers don't stand a chance unless they can hold that pullback, right? And that's why the market accelerated so much once it went back down, because everyone knew the gig was up. Now's your chance to sell high in a bear market, and price collapses back down again. So we can definitely be bullish, and if we do turn bullish tomorrow, I don't care what market I trade or what direction I trade in, right? The buyers, though, will definitely be trying to get back up into that trading range, but they have to hold the pullback first. And if they can, we'll find a new channel, we'll find a new set of, in this case, support levels, and we'll look for those buying opportunities from there. Remember, it doesn't pay very well trying to call reversals, right? The best way to trade, most reliable way to trade, the most dependable way to earn a profit in day trading is to figure out what is the trend, or as I call it, who has control, find out where they're trying to go. Okay, where are the bears trying to go right now? They're trying to get that measured move. They're trying to get down to the low of that channel. And then find a way to participate on the way to that objective. Okay? In other words, if we keep going lower here, I don't want to sell then, because I'm going to be selling right into the goal for the bears. All right? I want to sell where I want to sell where other sellers are getting in, right? Not where sellers are getting out. All right, guys? So great example there on the Nasdaq. And boy, I'll tell you, those are the easy charts. Those are the easy charts tonight on the newsletter. Now we have a little bit of slop and chop with gold and euro. You can definitely tell the tax plan over the weekend here in the U.S. You can definitely tell that was on the radar of gold and euro this morning. Start off with gold, we'll wrap it tonight on the euro. Gold is bearish, obviously bearish, with a flag pattern and trading just off the low of this triangle or this trading range you can see I have on the chart. Now, flag patterns can be tricky. The goal of a flag pattern is to sell up above the high of this bull channel. That's right, it's a bull channel coming off of this low, but it hasn't turned bullish yet, so I do want to keep selling. Right? The goal being get above this bull channel, maybe up around Friday's gap at 1283.1. Wouldn't that be a great spot to look for some selling opportunities? So I think the most important thing right now on gold is take a deep look at this market. Really look at kind of what the overall chart looks like. We have some falling resistance coming down before we had rollover last week. I mean, this is the 218 contract. And then you'll notice, right, we haven't seen any lower lows, right? So you could draw I have mine drawn like this, but you could also draw it a little bit wider like that. I think the first one that I have drawn is going to be your most reliable. So what is this? We have lower highs and we have higher lows. This is a triangle. It's a trading range. And what do we do with the trading range? We buy low, we sell high, we focus on failures. Okay, so now, where are we right now? We're coming off the low. So naturally, I want to sell up around the high of this range. Now, we may not get that far because of that gap fill that I have marked up on this chart. But the ideal, right, the ideal scenario is we go up, and we can sell it back down using this overhead level of resistance. And hopefully tomorrow we get a little bit more of a pulse than we got in today's session. Like I said earlier, you can definitely tell the gold and the euro were definitely a little bit weary of today's session right after that vote over the weekend, right, with that new tax plan here in the United States. So with that said, we're coming off of this low right now. I have resistance waiting here overhead. Another big clue is this gap. Right now, gaps are oftentimes one of the, well, I made a lot of mistakes when I was a new trader, putting too much emphasis on gaps. I don't want you to think that gaps are the most important thing. They do tell me that we've got some unfinished business. You know, gaps usually get filled. In fact, in my experience, when it comes to a Friday close, Monday open type of gap, that gap usually gets filled before Wednesday of the following week. So although I couldn't tell you when the gap will get filled, it will most likely get filled here this week. And that would, of course, set things up for selling opportunities up around the high of this triangle, right, or this trading range. But I think the most important clue is this channel right here. Now, I talked about this today in the trade room as well as in the free pass with a guest, right? Think of this as a strong move down. Anytime we have a gap, right? Anytime there's a gap on this chart, and keep in mind, these are specific chart time frames that don't usually have gaps, right? That's the closing price on Friday and the opening price Sunday night, right? We call this electronic trading hours, right? The pits are dead. Everybody's electronic now. Closing price, 5 o'clock on Friday. Opening price, 6 o'clock p.m. on Sunday. That's the gap, right, in price. And what basically happens is orders that are left outstanding that were not filled on Friday, or orders waiting to get filled on Sunday night, once the market opens, it tries to fill all those orders and it gaps up or gaps down. That's what creates this gap, right? It's basically either too much supply or too much demand right when the market opens up. They're relatively rare, believe it or not, right? Usually there has to be something big happening, such as the tax plan, right, over the weekend. So the bottom line is, think of that gap down as being a big bear candle down. Then we have some higher highs, we have some higher lows. Now, have you watched that video I did? If you haven't, make sure you go to my blog at Sideways Markets, right, and search for that video, pullback or reversal. Okay, just search for the term pullback or reversal. You'll find a great tutorial on how do you know when a market is pulled back versus when is a market reversed. Well, we just talked about this a few minutes ago. What does it take for reversal? It takes a strong move up, hold a pullback, and more strength. Do you see that here at the bottom of this range? Do you see any strength for the buyers? No. So there's no question whatsoever this market is definitely not bullish. But we do have some higher highs and some higher lows, right? This is why when people ask me, how do I define who has control? Higher highs and higher lows, or lower highs and lower lows, are not on the top of my list. It doesn't matter if we're getting higher highs or higher lows. I use the moving average, or the way the candlesticks react around the moving average, as my guide. Right now, this is a bull channel in a bear market. I know that sounds a little bit crazy, but we call it a flag. Strong move down. That strong move down tries to retest the low. It can't retest the low and it goes higher. We now draw a trend line off of that low, copy and paste it up top of that high. This creates, again, that bull channel in a bear market. Until it runs higher, this market ain't bullish, right? It's a bear market. So what's the best way to trade this environment? It's tricky because you'll notice, you'll notice that if we try to sell into this, right, this is major support. So trying to sell the high of that channel is dangerous. It's not very reliable because you don't have a lot of space, right? This low of the channel is a major level of support. So really what you're going to do is you got to get above it, and usually that will come in the form of a buyer failure and then sell back down from there. That's the best option. The next option would be look at that prior swing, make sure you get through it, and then use it for the sell from there. So two easy ways, well, maybe not easy, but they're definitely not difficult. Just got to wait patiently for this specific pattern. It's called a flag pattern. The challenge is it's not bullish, it's bearish. But we have this rising support trend line, the low of that, right? The low of that channel. So rather than just selling into that low, I want to get up above the top of that channel, or, really important, get through that prior swing. That's key, because a lot of times what will happen is it'll pull back, bounce, and go right back into that channel. Look for that sell after that little trap low fails. And I know I'm covering a lot right now, but not to worry. Our beginner, intermediate, and advanced classes here at School of Trade will walk you through every step of the process, and we'll do it together in the trade room, right? So you're never alone out there in your trading career. So sell above or sell below, just make sure you get enough room. So now let's put this plan together. We have this bull channel, right? Not a bull market though. I'd like to see us go up, get up again, up above the gap fill, top of this range, right? And sell back down from there. That's obviously where we're going to get the wide open space that we need for a big target, include some levels of resistance, fill the gap, right? And get it all done in one fell swoop. The only other option is I want to look left, and you can see a lot of support down here. So the only other option would be a strong move down, and then look for that sell from there, right? Using that trend line as resistance, and selling from there. As you can see, it's not going to be very easy if price goes lower. We're going to want to see a real strong move down, free up enough space so I can then sell back at what was support, but now use it as resistance. Now, another option here for tomorrow would be if we see the market take off to the upside, buyers hold, and we keep going. I don't care about being a buyer tomorrow. I just have to wait for a bull market. Okay, so as we go up, looking for that failure back down again, right, in this flag pattern. Or, hey, maybe the buyers take full control of this. Maybe they run up, hold the pullback, and go. And maybe at that point, right, tomorrow morning, we're grabbing a new bull channel, a new measured move, new levels of support, and we're buying from there. Again, I don't care what direction I trade in or what market I'm trading. All I care about is, what were they again? Who has control? Where's their goal or where's their objective? And where are we in relationship to it, right? Are we near? Are we far, right? Are we right on top of it? Right now, we're right at that low. So I don't want to be selling down at the low. I want to be selling up at the high, selling at resistance rather than selling at support. Let's keep going. How about some euro? Another little bit ugly chart here again, right? Euro definitely, again, kind of felt like the euro was a bit sidetracked today by that tax vote. Euro is bearish with a spike in channel and trading just off the low of a multi-day trading range. both of which tell me to stay patient for the most reliable trading opportunities up near the high of that range. Most importantly, up around that gap fill just shy of that 19,100 level, which is still open from last Friday. Now, this is a very similar situation to gold, but quite different. You'll notice big gap down between Friday's close and Sunday evening's open. What do I think about that? I think that's just one big red candle. Then what do we see? We see a spike in channel going lower. I talked about this earlier, right? Anytime we see a spike in channel, we know that everyone's probably already in short, and they're going to start growing weary of selling so low. If you haven't checked out the lesson on my YouTube channel or my blog at Sideways Markets, make sure you check that out because I've got plenty of topics on the term spike and channel. We now know where, right? I want to look for the base of that channel and the first pullback, and that gives me an easy idea for where I want to look for selling opportunities tomorrow. You'll notice though when I go back to my chart, right, that takes us up here and up here. So really all I need here right now is to get above that prior swing. Up and then fail back down. I would love to get a gap fill. I would love to incorporate, right, the high of that triangle or that range. But in all reality, it's really not required. It's a real strong move down into this spike in channel. I tell you what I don't want to do. I don't want to sell into this measured move. Measured move here, I think, is the big culprit here this afternoon, right? As far as what's preventing this market, right, from really diving deeper. That measured move looks like it's the culprit. Let's get up, failure, and back down. If I can get a gap fill on that as well, well then more the merrier, right? Failure into pullback. That will be wonderful as well. So feel free to go as high as you want here tomorrow morning, Euro. I'll be looking for those buyers to fail on that pullback so we can then look for a sell right back down. What if the price tries to go lower? What if it keeps grinding lower here tomorrow? Not much changes. I still want to wait for that chance to sell high. So if it keeps pounding lower here, you focus on selling high because much like the other markets, right, we got some big targets coming back from last week, right, down at that 18,200 level for tomorrow. So if we don't pull back and go higher, right, to sell high, we'll definitely look forward to traps and buyer failures up above prior levels of resistance as the market grinds lower tomorrow. All right, guys, that does it for our newsletter here for tonight. Don't forget, tomorrow morning, 8 o'clock Eastern time, I look forward to seeing you there with me, and we'll execute this strategy together. If you're brand new here to the School of Trade community, if you're on my YouTube channel or on my blog at Sideways Markets, coming over here to schooltrade.com, join our free trial to learn more about the trading strategies that we teach and trade every day in our trade room. And while you're here, don't forget, check out our beginner, intermediate, or advanced classes, and I'm always here to answer your questions 24/7, 365. Don't forget about rollover later on this week. We got non-farms on Friday. We'll see you guys same time, same place tomorrow morning, 8 o'clock Eastern time in the trade room. If we don't see you tomorrow morning, come back and see me again next time tomorrow night, same time, same place for our nightly newsletter. Don't forget, leave me a comment below the video if you like what you see. Join the mailing list, and I'll see you guys next time. Adios, amigos. Bye-bye.